Good morning, everyone. It is Monday, July 19th. This is Nadex Morning Analysis. I'm Todd Rich with Nadex. I am back after taking a couple of weeks off. With me, as usual.
It was just one, Todd. It was just 1 week.
Well, we took 1 week off. I took two. I know that Dan had me covered last week. Boy, did I was sorely needed. To turn it off for a little bit after a year and a half of just working every day. With me from Keep Trading Simple is Brian Caprice. Yeah, I can tell you, I got some stories. One day I'll have to try to share all the stories of my adventures out west. Earthquakes, record-setting heat, fires, monsoons. Man, it's cuckoo craziness out west. Before we jump into
gas.
I tell you, it's like it's biblical out there. Before Brian and I jump into hot spots in the markets today, and we do have some hot spots, a lot of things going on, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So what do we have going on today? And there is a lot going on. Number one, if you didn't catch it last night, OPEC plus, that is OPEC plus Russia, they announced that they're going to increase output as demand goes up for oil. They're going to increase output up to, they're going to increase output another 400,000 barrels a day. That is driving oil lower. I mean, oil just a couple weeks ago was up near 75. Now here we are down below 69. Oil getting clipped quite a bit. Down below $70 a barrel. Interestingly enough, while OPEC is saying, hey, demand is up, we're going to start pushing more oil out. That is going to push the price of oil down. We've got a couple other things going on, and it's going to be interesting to see how these play out. We've got inflation, definitely inflation, but oil price coming down with the output. But we've also got, and I can verify this, and I can, at least from my own personal experience, from what I've seen, there's a lot of concerns over the Delta variant of the coronavirus, and we're seeing, and the markets are actually reacting a bit as they did at the beginning of the pandemic. We looked like we were out of the woods, but now you're seeing everything sort of sell off because this Delta variant really is going a bit rampant globally. But it's even hitting the United States. I can vouch for it in as regard to, I had to get a test yesterday. I tested negative, but there were a dozen people in front of me at the immediate care facility. All fully vaccinated folks showed up with cold symptoms, all picked up the COVID. So we are seeing another wave of the virus starting to spread. That'll be interesting to see how this all plays out. With that, Brian, I'm going to flip it over to you, and we could talk. I guess let's talk a little bit about oil. Clearly, we have to. It's getting hammered. We could talk about the U.S. equities, all looking to open lower, 1.5%. Equities getting killed, and then there's the dollar going through the roof. So I think we should take a look at it, sort of go around the horn and take a look at some technical levels in oil, equities, and maybe a dollar pair or two.
Yeah, so obviously oil was a big deal. We were waiting for the OPEC plus situation to kind of kick in for a while. It was, they had an agreement, and then the United Arab Emirates basically was like, no, we're not in for that one. And we were seeing prices up around, $76 was, I think, what we were pushing at. Yeah, let me go back over to oil real quick. Yeah, you were seeing it up here in the 76 range. We talked about we had a higher time frame level, which we hit back on like the July 6th time frame, and we've had a hard time with it since that time. And we've pushed down. And again, this is all the news back and forth about whether we're going to increase production, not increase production. And we talked about one of the fatal flaws inside of the agreement with OPEC Plus, that it had to be a unanimous decision. When you have a unanimous decision and 8 people involved in it, it's very, very easy to derail, debunk, smooth progress. So right now, obviously, in the overnight, you can see the blue box. Obviously, is the European session. You can see last Friday, all we do is really retrace back to where it opened. It wasn't, anything stellar, and we expected news over the weekend. It kind of pushed down, and this is where everything started off. And again, if you guys missed it, you can guys go over across the daily effects. Just click on crude oil, and you can slide across the news and just find it right there. But they're striking a deal. It says it's funny when the article was written. I guess it was written right at the European Open, which always cracks me up. Like that's when the market's going to move, but that's when the article came out and it says prices were a little changed. Well, guess what? It's changed. It's down almost $2 since this article was written. But if you're looking for the specifics, it says now a bargain has been struck to see output increases by 400 barrels per day per month. They're ramping up to 2 million. It's going to add an additional 5.8 million. So this is one of those things where you're increasing supply. You should see a drop, back to the downside. And that's what we've seen. So it's very interesting. We're pulling back onto that $70 mark, and that was a big psychological number. Where I would say that we need to be cautious with this is, yes, this is a very, very big push down. Is it justified? Yes, there's an agreement. There's more supply coming online. It's coupled with inflation and rising interest rates. Remember when, we know that the largest amounts of inflation right now are coming from the energy sector, particularly in oil. Everybody's saying that it's coming even faster. It's ramping up faster. We're starting to see some nations. New Zealand is at a 90% chance of raising interest rates in August. People are acknowledging that inflation. It's going to continue to accelerate. You have to expect that you're going to see it over here, which will drive people to not drive them, but keep them from driving as often, which will actually lower demand. So, I did a kind of a poll with my students last week for what their average gas prices were, or in your area. And the consensus in most places was between $3 and $3.30. And then one of my California students was like, "Hey, it's $4.75 here."
Right.
I can tell you right now, in Maryland, if gas was $4.75, people would probably not be driving as much as they are right now. It absolutely, without a doubt, would keep people from moving, which would stifle our economy. So it's one of those things that, with increasing supply, again, oil is very greed based. It's one of those things. It comes and goes, but yeah, there's movement. So I will say right now, at least on an hourly basis, we are actually hitting some levels, and it's been so long since we've been back over here. We're really dealing with this kind of 69 mark. And you can see the last time the price was down in the 69, we had a spike down to 68, kind of 70 area. But again, strong push off of it here, strong push off of it here. And really where we are right now, if you look at this candle, this was a quick, very big spike down very fast. Excuse me. We did have an area of basing right below that. So we're in an area where buyers have stepped in. I would say right now, we have, let's see, in just the European session, because there was some movement before, we've had about $1.80 worth of movement. If you look at the daily ATR to figure out, is this a normal move? A normal move right now is about $2. $2 a day. So we've really gone through most of what we can do. And again, that's just the European session. If you take the entire move from, say, midnight till now, you're at $2.55. So a lot of people ask, well, should we short oil right now? All this news, like the U.S. trader hasn't reacted to it. Could you? Yeah. Do I think they're starting to extend beyond what's capable for oil? I would say probably yeah also. Remember, anytime you have an extreme move, right, things tend to revert back to the mean. It's a philosophy and kind of a theory. If you guys are familiar with Bollinger Bands, it uses statistics to determine, and again, statistics based off of a moving average, where it talks about how price typically will stay within 90% of that area, 90% of the time it'll stay within a specific area. And what happens is when you breach, there's a rubber banding effect to bring it back. And again, it's called profit taking. There's a lot of different things that you could call it, but for the most part, it is profit taking. This is a lot of movement. And again, yeah, the oil news justified it. But at this point, will it continue to drop another $2? Will we see a $4 drop in oil in one day? Most likely not. Wow. That would be an extreme. And we kind of already knew this. The 400,000 barrels a day was not anything we didn't already know. The debate was whether it was going to be 400 or 500,000. So it's not like they came out with a figure and said, it's going to be 800, right? It's not like it's a mega surprise. So again, this is a justified move, but I'd be very, very cautious at this point, assuming that it's going to drop all the way down to 66 today. Could it? The market can do anything at once.
But you're actually seeing some profit taking a little bit right now as we speak.
Mhm.
right? As the European traders are coming off, they might be looking to take some of these shorts off right now as you're
Yeah.
starting to catch some green candles in here.
Yeah, and again, we have on the 4 hour and the hourly, we have buyers sitting right below this in here. So this is probably just the front running, making sure that they don't get stuck with this thing kind of spiraling back up again with the U.S. trader coming online. So you know, big mover. Can we trade it? Yeah, there's probably reversals we can take off of it. I would say see what happens at the open on it. There's no real news today that really can affect it. It's going to be more of kind of a media driven kind of piece to it. So take it for what it's worth. I would say there's been so much movement that everything's adjusting to. I would say that Monday's theme today is probably going to be reversal. Like I said, profit taking. People jumping in. People wake up and say, "Oh my God, it's down 2.8%. I need to get short this today." And then what happens is it goes straight up. Like the market knows they get in. It's not the market knows they get in. It's just that again they will be profit taking and things like that. So ways you can play this. It's Monday, right? Nadex has the ability to trade longer term. There's not just intraday kind of trading there.
Those
Maybe get,
knockouts.
yeah, maybe look at knockouts or even, maybe call spread for today going higher. So, there's weeklies in there as well that you can take advantage of for some of the binary products. So there's a lot we can do. We can play that reversal. Do I think oil's going down to 60? No. I think that's quite extreme. I'm not surprised by the big drop. Again, we had higher time frame levels there, and we do have higher time frame levels just a little bit below where we are right now. So I would say, for the most part, I'd feel like long today is probably a decent way to take this one. Maybe wait for the open, wait for a little bit of a pullback down before going long. And again, if you're looking for an area of basing, we do have it. It was a one candle base, so maybe we look at again a little bit of stabilization above kind of that Harry Potter pullback. Um, Maybe coming in at like 69.20 ish level. Could it be a decent area to go long from?
All right. Well, oil definitely in play today. We're talking about hot spots. Oil's
Mm-hmm.
one of them.
Mm-hmm.
Let's
Say the
talk a little
dollar.
bit about the equities. Well, before we
Yeah,
get to the dollar, we'll finish with the dollar because equities are all getting. Uh, I mean, everything's looking
yeah. I
significantly
mean,
lower at the moment. I think let's just take a peek at
yeah. I
any
mean,
one
they're
of them.
linked. Yeah, they're linked. I would say the equities have a lot to do with inflation. Again, inflation is basically the dollar. The only way to confirm inflation or whether it's having an effect on the market would be to look at the dollar. Because remember, the way to curb inflation is to raise interest rates, which brings a lot of strength into the dollar. So that's kind of where you're seeing it on those charts. As far as what we have, I mean, we had an area here we talked about last week, and actually we've had this position ready to go since July 8th. So if you attended last week, you knew about this. It was an area where we had basing was a prior area of interest with a break of
This is the
14.
Nasdaq.
Yeah,
Yeah, yeah.
if you had a break of 1460, 648. We were looking for price last week to come all the way down and test that level, and it was really just a quick spike down, gave us that 1 to 3, and then pulled back up again. It didn't quite get back up to where we were looking to short, and then just continue to drop. And again, if I continue these across, I mean, you can see the pattern here, but it's the same pattern. When we have these levels of basing and we blow through them, you guys can see right there, it's the same pattern. I mean, I could draw it on about 6 different charts right now. To the downside. And again, we were looking for a target lower. We didn't get it here, but we got our 1 to 3. It came back up. It formed that basing level here. And again, this is the 16th. So it's kind of once this blew through, it was kind of nothing. And then again, here is your 16th trade where it came back up and touched, came all the way down, back over here on the 18th. Now we did the same exact thing. Here was that old level we were looking for, but we talked about the break last week. And this is why I don't delete these from my charts, because you never know when they're going to come back in. And had I set an alert here, if I put it the alert, I guess it's over here, right there. You can set an alert. I would have known that it came through. Here's yesterday. It popped through, and then this morning. And again, ideally, I don't like to take these on Sunday nights, but as soon as the European session opens, it's off to the races. Let me move this little Harry Potter symbol. There's the European Open. What do? We had an old level. We were looking for a break. We pulled back to it. We grabbed it. We went all the way down, and now we're hitting another level at 14,528, and it's starting to pull back again. So this is now the profit taking from this move, and this was quite a large move in the overnight. You're talking about, yeah, a bunch.
Yeah.
I'll let you guys figure that one out. Like a little over 100, right?
100, about 130.
Yeah, about that. So right now, I would say it's in an interesting spot. I would say that it's kind of set up probably for a bit of a reversal. Obviously, it's going to be the same thing. You're down, almost 1%, 0.88% in the overnight. People are going to see that and say, "Oh, I got a short." We're going to, but there are buyers below. We know the buyers are sitting down there, so I'd be very cautious with that. Here's where that original area was formed. It was a decent base of about 4 hours, and then Europeans stepped in and punched it higher. So it was a session open base zone, as well as there's a couple other areas a little bit south for buying. But I would say areas today that I'd watch out for. And again, we could have everybody could get negative on this right away, but I'd say we're seeing the profit taking here. I would say that 14,469 is a decent level, but I really like this 14,377. The way that popped back here, again, this is a nice pop. It came through European session open, and then again started the grind higher, and then exploded at 9 o'clock. So there was two different sessions that supported that right at 14,375. And again, we could be, you could look for knockouts or anything longer if we can get down to that level. Although that's a lot of movement. If that continues down another 160 points today, that's quite a big drop for kind of just inflation-based news. And if you're wondering what the inflation, go ahead.
I was going to say, I just want to take a peek over here, just for a second, just because Nasdaq is down 0.9%. The Dow's getting hammered, 1.5%. But I just wanted to take a peek, just because you mentioned it. If you wanted to take a look at maybe some of these knockouts, I just want to see what we've got in some of these indices. Let's just take a look at the Nasdaq. Let's just take a peek at the chart. I mean, we do have some knockouts in here, just below, where if you wanted to, as you wait and see what happens on the open, because again, you got to let the U.S. Retail trader get online. I mean, there is a knockout that's pretty close to where we are right now, and again, these are weekly contracts. You got limited risk. If it drops down, touches that bottom, but once you could kind of just test the waters and see where we are once the market opens. If you wanted to try to catch a retracement, maybe this morning. Remember, you also don't have to hang on to these things for the entire week. You can, but you have that ability. If once you get in, you can always choose to liquidate. Either to stop your losses or to lock in some profit. So knockouts could be kind of interesting way to play some of these equities this morning. Sorry, go on.
Yeah, I mean, and the NQ is in a 4-hour zone, so we're at a 4-hour buying area. That's the thing that may halt it. And this is why this is kind of like one of the big news pieces around it. And we're talking about record inflation levels are coming with the worst of all worlds. And this is, let me read a couple of the small things in here. Inflation in the U.S. will climb between 6 and 9% by year end. Again, not transitory. Again, crazy. But what he does is he compares this level of inflation to what we had back in the 70s. He said the 70s was terrible. It was the worst of all possible worlds. You have a lot of inflation and jobs are scarce. That's not what we're seeing now, by the way. We're seeing inflation in a booming economy. We're not seeing the stagflation type of thing where the real economy is weak. The real economy is very strong and booming right now as we're coming out of a lockdown and things are getting back on track. And like you said, he says that it's the worst of all worlds. So, this is the exact opposite of what the Fed is telling us. If you don't know who this guy was, he served on Ronald Reagan's Council of Economic Advisors. And he says that last year's, rapid money growth, money supply will work like a charm, that it's boosting the economy, fuels growing asset prices. Again, we're not hearing about companies going out of business anymore. We're hearing that advancement. And again, things like that, this is what set, from the time that he's mentioning this is what we've seen in the dollar. Again, we're not trading the Dixie, but since the European session opened, that occurred right here. You're seeing that the dollar has exploded. Now, it is hitting levels, and there are some levels up here around 93. 93 is traditionally high for the dollar. And what you're seeing is over in the currency realms, I mean, pick your poison. You're seeing euro dollar down, pound dollar down. Dollar CAD is up chart, 145.
That chart looked almost exactly like the U.S. CAD, the U.S. Canadian dollar.
Yeah. I mean, there's the dollar CAD right now.
It looks like it's the same chart.
Yeah. I mean, it's we talked about the small level. We hit a 1 to 3 on Friday that we talked about. We talked about kind of an extreme level at 126. But again, one of the things that is a major force inside of the markets, particularly over a weekend. And again, this is a European session move. Here's the European session open, reacting to that level of inflation. Again, is a 30-minute zone going to be able to battle back a comment about 6 to 9% inflation? No, because an interest rate is one of the things that will, you cannot do your analysis on a 5-minute, 15-minute, 30-minute chart for something like interest rates. That is a big enough decision that you need to analyze it on 4 hours, dailies, and weekly charts, because those are the type of volume that is associated with that type of a news announcement only occurs on those much larger time frames. So we're high, we're pushing up. As you can see, we missed it by a little bit. I think there will be some profit taking. And again, in the European session move here, you're talking about 168 pip move. The daily ATR on the dollar CAD right now currently is only at 99. So we went over 1.5 times.
Yeah.
Again, that qualifies as a parabolic retracement move. So I would expect this one to turn around and kind of come back down today. If it comes, does it come all the way back down to the 126? I don't know if it'll come that far, but I will say, 1 in 15%. 1.15% move is a lot for the dollar CAD in one day. And again, it's not just the dollar CAD moving, it's anything associated with the United States. The yen is also getting immense amounts of strength right now. You're seeing the Aussie yen down 1.28%, the euro yen down 0.8%, and the pound yen down 1.11%. So it's dollar strength, yen strength, and again, as much dollar strength as we're seeing, even the dollar yen right now, you can see even the dollar yen right now, that's what the chart looks like. And again, there's your stabilization point that we saw before, and it's punched through straight down. So yen strength it's on fire right now, followed closely by the dollar, and that's a 43 pip move in the last 30 minutes as well. So quite large.
Well, that's a lot. There's a lot going on at the beginning of this week. Let's just actually, before I do the recap, because we did go a little long today. It's Monday, but there was a lot to cover because there's a lot going on. Any questions for Nadex, please email us, customerservice@nadex.com. Brian is also quite accessible. Please feel free to email him at support@keeptradingsimple.com. What did we talk about today? Here we are. We're starting off the week, a lot to look at. Oil, OPEC Plus cranking out, pushing up production. You're seeing oil drop. We've got inflation concerns, and we've got an uptick in the COVID virus. You've got concerns. The equities all getting hammered this morning, 1 to 1.5%. But we're seeing strength in the dollar, significant strength in the dollar across the board. So definitely lots of trading opportunity. Binary options, great way to play these in a limited risk, limited reward way, but very defined risk. Also, if you're looking for some of these retracements, you might want to take a peek at some of these knockouts because there is some trading opportunity out there. Brian, you got anything else you want?
Yeah, I would say check gold too. It's up $15 in the last 35 minutes. Off the level we talked about last week. The 1795. Yeah, everyone's like, inflation, really? Yeah, from the 1795 level that we mentioned last week, it's been a level that we've talked about for a while. Yeah, it's a $15 move in the last 45 minutes.
Yep, look at that.
Right there. There's your move. There was the level we talked about last week. So yeah, you can see this is exploding now with the inflation talk.
Lots of things going on. So as I get adjusted, excuse me, and get back into the swing of things, Brian and I will be back tomorrow morning. So thank you all for joining us, and we will catch you tomorrow morning. Good luck in the markets, everyone.